Okay, good evening, everyone. Welcome to the weekend video. Um, as always, I'm going to tackle the six markets from a larger perspective into the short term, from the medium to long term perspective down to the short term chart. I think I'm going to work backwards today. I'm going to start with crude oil. That's what we're looking at right here. It's the 4-hour chart. And hey, let's just get into it. Stop talking and well, I'm going to keep talking, but stop chit-chatting and just get working on it. Okay, so in crude oil, I have been developing this idea of a 5-wave pattern up to complete a wave C here in green of a larger degree wave 4 in red there. The 5-wave pattern looks something like this. If you can just slightly off screen there, but we have wave 1, 2, extension in wave 3, contracting triangle in wave 4, and a possible continuing 5th wave pattern developing right now. And there is some doubt on that given the short-term action, but I'll go into that a little deeper. Well, hey, starting right now, why not? Okay, like I said, the possible 5-wave pattern underway. We definitely had a contracting range here. The best way I think to view that was a contracting triangle in this wave 4 blue. Now you'll see here that this is the alternate count at this moment in time. So that's a possible top in wave 5 already completed at the recent high of let's see there, 66.50 or so. It's possible that it's possible even veering towards likely that the top is in crude, even though I have been expecting, and I'm still geared for the a possible run up into complete wave 5. Now this is, I know it's getting I'll try not lose myself in the weeds here, but suffice to say that this alternate count here, which views the recent high at 66.50 or thereabouts, as the possible end to this rally that we've been tracking for a pretty long time now at this stage, nigh on 6 months. Okay, I'll get down into the shorter term chart here, and we will view this this recent descent here, and we'll kind of decipher what's been happening. So that's the 4-hour chart complete on crude. Here is the I think it's 30-minute chart. I'll go to the 1-hour chart just for pig iron, as they say. Alrighty, so the current chart, there's our alternate 5th wave here again. The current chart is of the perspective that we could still have a 3rd wave rally, and that would look something like wave 1 complete, wave 2, and a rally up in 1, 2, 3, 4, 5, and complete and continuing as a 3rd wave. But this evening we've had a pretty sharp descent. So far that's in 3 waves, so it sits decently with the short-term outlook as a possible developing 1-2 off the low. But the fact that we're getting close to support there it's now the London market's closed, so it's 5:30 here in Ireland and UK time. So London market's closed. We're just slightly above support here. We could still break support before this video even finishes, and that would again cast a little bit of doubt. I won't change tack for the moment. I'm still, short-term bullish until we get a break of that previous 4th wave low. If we get a break of this previous low here, support there at about $60, then I think I'll be changing tack, and we will be moving to the alternate count, which views the complete rally as complete. The whole rally in wave 5 and wave C at 1 higher degree as complete. So we are quite close to that eventuality. So it's definitely one to keep in mind as say the early trade next week or into the middle of next week as that develops. So far, so good. I mean, we did have a 5-wave rally, and even up to where I'm casting doubt on myself here right now, it still counts best as a 3-wave decline in a flat. So let's get rid of those scribbles for a second and see. We have 3 waves down in A, 3 waves up in B, and then a 5-wave decline in C there, with a very small 1-2 at the beginning there. So, I'm kind of on the fence in the very short term as to whether this might develop maybe into an even larger wave 2 correction, or if the current theory will be proved correct and we will get a rally higher in wave 3, which would be wave 3 brown here, in brown labels. So I think for early next week, what I'll be watching anyway, will be this initial support here, 6204 or 6205. Definitely a break of 62 will rule out this short-term pattern. I'll have to alter the count. Like I said, for now, it holds. We've still got that bullish setup off that 62 low. The market is quieting down now. We're sitting at about 62.30 or 62.35. Or slightly, it'll be slightly different in the cash market, but suffice to say we're slightly above support. So the bullish pattern remains for now. I think on Monday, if that low holds and we get a break of the previous wave 1 high, which was, let's get a reading on that. The high was at 64.09. So if we get a break, I know it's there's 200 points in that, but or 170 points. If we get a break of that 64 level, and if it's an impulsive looking break, I mean, if the market shoots higher on Monday while holding support there, well, then we will, but that action will most definitely reaffirm the kind of short-term bullish outlook. But for next week anyway, I would like to, I'm just going to hold off and see if we can see a 5-wave pattern to the upside in gray labels. Then we'd be looking for a 3-wave decline, which will set up that impulse pattern in gray labels to the upside, and it will prove to be possibly the best point at which to ready a trade in a third of a third wave. In general, in trading at 8 waves, you want to wait for wave 3 and wave C. They're the kind of the real explosive momentum moves. In this case, it'll be wave 3 of 3. So that's kind of where I like to hold my powder if I'm going to trade it. So for next week, I'm going to hold off and see if we can see a larger degree impulse wave to the upside develop. All right, so let's move off crude for now, and I'll go backwards. I'll go to gold, and we'll finish on the FX market then. Okay, so again, I think the choppy action that we've seen over the last couple of days is actually quite bullish. The fact that the market is still stuck within this sideways range, the fact that we have an alternate count here, which is even looking, well, let's say if I should actually go to the 4-hour chart here. The alternate count here, which could be viewed as a possible 1-2 and maybe a 1-2 again off that the most extreme low there, which was 1303. Given like you put those points together, and you're kind of creating a pretty bullish picture in my mind, in the larger degree. Let's go to the short-term chart again. So what I've been working with the theory that I've been kind of developing over the last while is 3 waves down in A here. So we've had, well, that was 1 A, B, and C down in A. 3 waves up in B. I have to work on that. Get rid of that. Doesn't even look good. 3 waves up in B, and a possible 3 waves down in C. That would make it a triple combination. I cannot rule out the fact that this is 5 waves down, 3 waves up, and it could possibly morph even at this late stage. It may morph into a 1, 2, 3, 4, 5 pattern to complete wave C. That remains to be seen, and if it does, I mean, we just take that in hand. I think the targets will remain the same. I think the low in wave C here, I don't think will break much below that that lower parallel trend channel there. So you're kind of targeting on the low end maybe 1290, 1285, 1290. If we get a 5 wave pattern in wave C here, then we're talking probably 1285 or something like that. If you go to the 4-hour chart again, I just want to point out one little factor that I have failed to remember. I've failed to state the correction in this wave 2 here. Will most likely, or if not, if it shouldn't reach rewind there. I'm not going to cut this out. I'm recording this live, but I'll rewind and I'll restate that. A wave 2 correction will most likely target the 61.8% Fibonacci retracement. See, that wasn't so hard, Andy. That you don't have to get tongue-tied about it. So here's our 3 waves down in A. Here's our 3 waves up in B. So that's a 3, 3, and maybe a 3 or a 5 wave pattern to complete. We're looking on the low end there at 1282 there for the 62% retracement, Fibonacci retracement. In general, I am long-term bullish gold. We need to see an impulse wave off a significant low in order to turn, let's say, turning a long-term bullish perspective to a short-term trading opportunity. Even if you are looking to keep a trade open for a significant period of time, the same theory stands as you watch for a complete corrective pattern and then watch for an impulse move in the direction of the larger trend. So for that to play out, I would like to see this whole correction complete in terms of structure, and then I would like to see an impulse wave, 5 waves up, 3 waves down, complete back in the direction of trend again. So that may take another week, maybe even 2, depending on how this last leg down plays out. So for gold, in the short term, in the next few days, next few trading days, let's get down to the hourly chart again. I still want to see this downside trend channel, a lower degree trend channel here. I want to see that filled. We could have a 1-2 pattern, depending on how this this little move here today plays out. I have a feeling that could be an expanded flat wave 2, and then we'll see a further decline below 1322 again on Monday. If we see that decline below 1322 on Monday, then we are pretty much guaranteed to continue into at least 1303, I think, to complete that flat correction, that combination correction, let's say. Okay, so that's gold. Let's move on to stocks. All right, so this is the Dow, and obviously I have been tracking this developing series of 1-2 waves to the downside over the last couple of months now. Since we got the highs, that was, what was that, the 29th of January? We had a nice call off those highs. So in general, we're still working on a topping process. Myself, I'm geared for this market to my own personal view is this market is complete. The bull market is complete, and we are now moving into the bear market phase. We've already began the bear market phase, but the price structure itself is moving into that decline phase of the bear market. Like we're declining on the slope of hope right now. Climbing a wall of worry and decline on a slope of hope. We still have this incredible bullishness evident everywhere in the market. People really haven't come to terms with the fact that this, even though we've experienced it over and over again, in the last 20 years, we've experienced a bull market high after, cycle after cycle. We've experienced it. We know exactly what they look like. At least we should know exactly what they look like. And if you want to be precise about it or in your face about it, this is what they look like. Take note. This is what a bull market top looks like. You get developing impulses to the downside. They do tend to churn a little bit. Like this top kind of reminds me of the dot-com top, really, actually, because the dot-com top took a year, I think, more or less, to play out in order for the significant declines to begin. We're only 3 months into this, so it may churn on for a little longer, but we will get successive lower highs, and the bullish atmosphere will probably even get more. The atmosphere may even boil up to an even higher bullish degree. People will do even stupider things. But the outcome is the same, and times change, but people don't. So we've got a large degree bearish pattern, probably 3 degrees of 1-2 waves to downside. We may even be building a further lower degree 1-2 wave off the recent high again to the downside. So I might even move this pattern, these labels, up 1 degree again. So we could be talking about a wave. Let's change this out just as a matter of interest. We could be talking about a wave 1 in red here rather than blue. So that would be 1 degree higher than I have shown at the moment. But for now, we'll stick with what we've got. So we've got 3 degrees of 1-2 waves. Let's get down to the short-term chart to see how this expanded flat here has played out over the last couple of days. So we have this ABC pattern in wave 2, which is, wave 2 gray. So you can see that's wave 1 gray into wave 2 gray. We've got this ABC pattern, possible 3 waves up, 3 waves down, 5 waves up to complete. The fact that we got, again, I'll go back to the 4-hour chart, the fact that the price came right up to that 200 period moving average there on the 4-hour chart, and we've got a spike lower again today. That does kind of lean in our favor again if we need more pointers to kind of say solidify the view. This again is a technical pattern developing that is most definitely not bullish, and I would not even be surprised if you see if you're watching, if anyone does watch CNBC or Bloomberg again. I don't watch them really anymore, but if you do watch them and you see analysts come on and they're superbly bullish on the stock market, you can be pretty damn sure that their institutional side, their trading side is working the opposite of that. I don't trust a bank as far as I could throw it. If they send people on to talk up the market, well, you can pretty much be sure that they're not on the same side of that trade. If I can see the bearish signs, there's no doubt that they should be able to see them as well. So let's get down to the hourly chart here. we've got a nice spike lower this morning. So, or sorry, last night. And into this morning again, we got a little three-wave, I believe to be a three-wave recovery in a possible wave 2 here. So we could again be moving down sharply in a third wave of wave 1. So we'd be looking for 5 waves down in wave 1, 3-wave recovery in wave 2, and that would kick off our decline or descent into madness. No, it may be a descent into madness for some people, not for me. A descent into wave 3 grey. So we'll be looking for a further 1, 2 to the downside early next week, maybe by Wednesday. That would look like that'd be about the 9th, maybe. So that would be 3 trading days. So about Wednesday, maybe Thursday, maybe late next week. On the far end, we'd be looking for that further Elliott wave signal. So we'd have, at that stage, we would have 1, 2, 3. Sorry, excuse me. There's 1, 2 down, 1, 2, 1, 2, and 1, 2. So that'll be 4 degrees of impulse waves to the downside complete by next week. If we get this continuing kind of range contraction here with impulse waves to the downside, or 5-wave structures to the downside. So for next week, I'm still looking for like kind of lower and lower degree kind of, let's say, finer signals. We're kind of tuning in the signal a little bit here as time goes forward. And as long as we keep getting patterns of 5 waves to the downside and 3 waves to the upside, even if we don't make any net gain in general in the market, net decline in general, we're still building up, say, downside pressure, if you can read that. So for next week, we'll look for a further lower degree impulse wave to the downside. All right, let's move on to dollar yen, which again has kind of played out quite well in terms of a larger degree turn in the dollar. I always look for dollar yen to turn firstly because it tends to kind of play to its own tune quite often, and especially at large degree turns. You kind of see dollar yen make intimations towards a turn quicker than you would like the transatlantic FX pairs. In this case, it may well be working out in that direction again. So in general, in dollar yen, I'm looking for again a 5-wave pattern to the upside, followed by 3-wave decline to set up a decent larger degree Elliott wave signal to the upside, a decent higher low as well. You could work. You wouldn't be mad to say that this would be a level to trade off, but we still could view this as a 3-wave pattern higher. I want to see a definite larger degree 5-wave pattern to the upside, followed by 3 waves down. In general, that's just the way we work. Okay, so today we had a little bit of a sideways movement. I'm happy to call that. I'm happy to call that this wave 3 as wave 1 to a possible wave 3 complete, and maybe a flat correction wave 4 pink before we see maybe on Sunday night trading in Asia. Maybe it would be good to see a further rally and a break of the wave 3 high, a possible push up into resistance on the overnight trade on Sunday night here anyway. That definitely does look like a little 3-wave correction midway within this 5 waves of wave 3. So again, there's another way you could view that. You could say that this is that we're working at a higher degree here, and we may go 1, 2, 1, 2, 3, 4, 5. So if you can follow me on that, I mean, this wave 1 here could be could also be taken as here. So we could be talking about a larger degree 1-2 pattern, then a finer degree 1-2 pattern, and then we'll look at lower degrees. So we could be grinding higher with bullish higher lows for the next week. That all shall be revealed in time. If that's the case, we'll definitely get a better entry point than we are right now, because, like I said a few minutes ago, I want to see a larger degree 5-wave pattern up, and we ain't got that right now. Say let's say in the next couple of days, I want to see that lower degree wave 1 high here, or that internal wave B here. We want to see 106.69. We want to see that high there hold. I don't want to see a break of that. The actual high 106.68. I think 106. Let's get a measurement on that. 106.68. 106.684. So that would be that interim high there on Wednesday. I want to see that high hold, and I want to see this wave 4 turn up early on Sunday night to keep this as a developing 5-wave pattern and a possible third wave in brown labels there. So still we want to see like a stacking or a layering of bullish signals here. We're looking at a long-term trend move change, a trend change here from, let's get down to the daily, back into this bullish pattern here. We're looking at a long-term opportunity here. So we have wave 1 and 2, wave 1 and 2 complete at the recent lows there. What we're looking for is a third wave up in yellow labels here at quite a high degree. That third wave up will be projected to a minimum of a break of 125 there. So we're looking at a pretty significant move in the dollar in general, and in dollar yen, we want to see a decent 5-wave signal, or a decent 5-wave rally followed by a 3-wave decline, in order to kind of give us that confidence level, a higher degree confidence level that the market has turned. But for now, let's say on the daily chart here, we've got 3 waves down. We've got a nice trend channel complete. We've got bullish divergence, say for the last, how long has that been going on? Bullish divergence in momentum since early February there. So we've got a month of bullish divergence evident on the daily chart. In fact, we've got a bullish break of the central line here in daily RSI. In general, everything is lining up in our favor here for the moment, and I want to nail that short-term Elliott wave pattern to kind of, let's say, the icing on the cake here in terms of signals to the upside. Alrighty, that's dollar yen. I want to start closing this out now because I've been talking. My mouth is starting to get dry. I've been talking for a while here, and everyone's probably tuned out at this stage. Okay, so we'll go pound dollar 4 hour. So during the week there, yesterday, I was talking about this possibility that we have a failed 5th wave here to complete the correction in pound dollar. And again, this is quite a high degree correction here in wave 4. And if we have got that high complete, well, then we're looking at a minimum, we're looking at a decline into the 117 area. So again, a significant decline on the cards in pound dollar. In the short term, we've got moving averages shaping up again to line up with the possibility that the market has topped. We could get a downside cross next week, the death cross here. We've got a kind of a cyclical shift towards downside momentum. in general, probably since late January, we've got this topping out in upside momentum. It's gone nowhere basically for the initial, let's say for February and March, it pretty much just went sideways. Again, that's another indicator that this market is topping out at a large degree. So in the short term, I want to point out, I want to nail a 5-degree pattern, a 5-wave pattern to the downside on the hourly chart. We've got this real kind of horridly complex looking correction going on here in cable. The market has pretty much gone nowhere all week, like since last Friday. For 7 days, since last Friday, since the close of last Friday, we've had a pretty much dead, stagnant market. We had this slow grind higher, which I thought earlier on this week may have been developing into a 5th wave up. That just did not transpire at all. There's a few ways that you could view that. It could be, I'll show you those now. We could be looking at an expanding triangle in a 4th wave. Possible, it's a possibility. We could be looking at an expanding triangle in a wave A, which I would veer towards. So this would be wave 2 to the downside, and that would be this is one of the most horribly complex corrections I've seen in a short-term chart in a while. This expanding triangle is, I would rarely ever, if I saw that develop on a chart once every 6 months, that would be about it. Like you rarely ever see this develop at all, especially an expanding kind of expanding wedge into a wave A. Again, it's quite hard to read this market right now, and that does tell me that something is going on that I should take notice of. If this market has topped out, and this shift in large degree momentum has plateaued and is beginning to turn to the downside, I would expect to see some strange things develop in the price action, and we may well be getting that right now. So we have a possible wave A, B, and maybe a 5-wave wave C completing at today's highs, on Friday's highs here. If that's correct, well, it's the weirdest looking corrective pattern I've seen for a while. But hey, then again, corrections are weird by nature. Excuse me. But if it is a correction, if it's a correction higher, well, then we've got 5 waves down and a possible 3 waves up completing. Like I said, I want to see. This is experimental for the short term, but I want to see a larger degree 5-wave pattern breaking support at 137. If we get a larger degree 5-wave pattern breaking support at 137, well then, we're game ball for end of the rally in cable, and we'll be looking firmly to the downside for the long term. And for the long term, I mean, over the next year, possibly a couple of years. So for next week, if we get a whole, or if resistance 142, if that stays untouched, that recent high there, possible failed 5th wave, and we get a further kind of decline into a possible 3rd wave down, then we'll be looking by the end of next week to see a complete or a nearing completion 5-wave pattern, and that would be in a wave 1 brown. Ideally, if that works out. Okay, so for next week, we're still looking for some direction, larger degree direction on cable. Okay, let's move into euro dollar. Euro dollar in the short term, still on the fence about, because we got possible turn in cable, a probable turn in dollar yen to the upside, and again, euro dollar for the last month has pretty much gone, or almost 2 months has pretty much gone nowhere. On the daily chart, we could well have, we've definitely got a severe bearish divergence evident on the daily chart. So it's time to most definitely to be cognizant of the fact that we could be topping out here on these the Atlantic cross rates, and we could be on the cusp of a pretty serious rally in the dollar. And if that's the case, I think we could be on the cusp of a serious decline also in US stocks, probably stocks in general across the Western world. Another point to take note of is this large degree correction in eurodollar that's been going on since 2015. Correction higher since this time 2015, so 3 years. This three-wave pattern to the upside in a possible wave B has been ongoing for 3 years now. So we had wave A, and that's 100% Fibonacci extension here of wave A. If you place that at the wave B low, you get a projected high of the, for wave C, you get a projected high of 123.50 or thereabouts. And you can see around that level, we've had a complete plateau of price action. The market just does not want to pierce on through these levels. So let's say from the daily perspective, if we get a break back below these this previous third wave here, which would be about the 120 level, and most definitely back in below the fourth wave there at 115.50. I know that's a long way down, but we could get a large degree of 5 waves down, 3 waves up. So that would be a bearish head and shoulders pattern developing on the daily chart. So this could, I mean, that's the left shoulder, neckline, head, neckline again, right shoulder. So you could be talking about a larger degree, 5 waves, 5 waves down, 3 waves up developing. And that could take another couple of months. So these are all kind of scenarios to remain kind of cognizant of over the next few weeks anyway, if not the next few months. I'm still, Eurodollar is most definitely on the fence. There's a definite possibility that we have a 3-wave decline in a 4th wave, and we could see another spike higher in a 5th wave. And in general, that's kind of what I've been keeping with over the last few weeks. But if we go down to the short-term chart, this can also be, that would be the recent high there. We'll go back 4-hour chart there. That was the recent high, 125.56. So if you can hear noise behind me, just ignore it. We're down to business here. You can't let a crying baby stop you when you're in the middle of a video. If we see 5 waves down, 3 waves up, you could still count. You could still count this as 5-wave pattern to the downside, 3 waves up. The 3-wave rally is most definitely clearer than the 5 waves down, but it's still possible. So again, we could be working with 1, 2, 1, 2. That's a most definite possibility. If that's the case, it'll become clearer towards the end of that. For the moment, this trend channel is suggesting at least another decline to support about 120. possibly 120.50, but a break of support of 121.50 to complete at least 3 waves to the downside. At that point, we'll see what the short-term pattern shows us. For now, for the short term, we want to see. It's hard to do this. Excuse me. For the short term, I want to see 5 waves complete to the downside. I'm sure everybody's tuned out of the video now anyway, so no one's going to be listening to my baby cry in the background. Okay, on Monday, I want to see a continuation of this break into support here, 122.50, and a completion of 5 waves down at pink labels. Timing is perfect in this house, I'll tell you that much. Okay, so I think I'll conclude at that, and I'll, I'll shut off the video and I'll start laughing. So let's say I remain skeptical in euro-dollar, given what's happening in the other cross rate dollar crosses. We may know more. Well, hopefully we'd be clearer by the end of next week. But the idea that this market is topping is definitely gaining prominence in my mind. Okay, so that's it for the week. I hope you have a great weekend. Forgive the bad. Let's say that technical difficulties there. Let's call them technical difficulties in the recording of this video. Enjoy the weekend. Godspeed, everyone. See you back on Monday. Bye-bye.